Hey guys, welcome back. Jeb Smith here. Today I have a special guest. I brought in Brett Swarts of Capital Gains Tax Solutions located in Northern California. I often have a lot of viewers reaching out to me talking about investing, different strategies, capital gains, and all of that stuff. And I thought I would bring in an expert who can talk a little bit about solutions, if you will, with regards to capital gains. It's a hot topic right now because, the Biden administration is talking about changing tax rates, and that has the ability to affect a lot of people. And, brought on Brett, who does have a YouTube channel, which I'll link to in the description below, also a podcast where he talks about a lot of this stuff. But today we're going to ask him some specific questions that can benefit you as someone who owns real estate, or maybe owns something else where, any asset that you sell has the potential to get taxed, right? And Brett has solutions for that, whether it be cryptocurrency, property, whatever it is. But Brett, welcome to the show. Why don't you, tell us a little bit about yourself, a little bit about your company, and we'll dive into it.
Well, thanks, Jeb, for having me on the show. Excited to talk with everybody. So, yeah, most high net worth individuals or those who own highly appreciated assets, they struggle with capital gains tax somewhere between 30 and 50% of the gain, depending on the depreciation recapture. So we use a deferred sales trust to help them get tax deferral, liquidity, diversification, and the ability to buy different real estate assets at any time, all tax deferred, eliminating the need for the 1031 exchange. So that's a big mouthful, but really it started out when I was at Marcus & Millichap as a real estate commercial broker, helping people buy and sell investment real estate. And this is like the 2006 range. Things were going really well during that time, 04, 05, 06, kind of the height of the market, if you will. And I was new in the business, just trying to make it out, trying to make it work, and learning a lot. It's 100% sink or swim type of environment. And I had some amazing mentors. And just when I started to get some momentum, everything hit the fan in 08.
Right.
Went from making a little bit of money to like nothing overnight. And so like a lot of commercial real estate folks or anyone who kind of has a business dream, when things go sideways, you got to kind of figure out a way to keep it going. And so as a part of that, I'm newly married, living with my brother at this point in his condo with my wife and baby, because we couldn't afford anything else. Like it was literally like bare bones, very, very humble financial beginnings. My wife was a rock star in that she said, yes, I believe in the future and what you're doing. And so by day I'd make cold calls and negotiate with banks, because see, my clients were going through a similar challenge. They had overpaid via the 1031. They had taken on too much debt. They didn't have enough liquidity. And now they found themselves in these deals that they know they shouldn't have been purchasing a few years ago, but it wasn't for the tax. They purchased it, right? Because of the tax, they purchased it, and they wanted to defer the tax. And so my manager at the time brings in a gentleman who's my business partner, and he talks about this thing called a deferred sales trust. And we're like, most people are like, what is that? Never heard of it. Sounds too good to be true. My CPA's never told me about it. But I was curious enough and open-minded enough to just learn a little bit more. And so, and then start to talk about it, and started to call clients and ask them about their experience with 08, right? And so I did that for the next couple of years, and started to meet with people and discuss alternatives and, and different ideas about the deferred sales trust. Fast forward, my business starts to grow. I coach and train people now all over the nation on how to use this, whether it be high net worth clients, or commercial real estate operators, luxury realtors, cryptocurrency owners, right? On how to use this thing to exit well, defer tax, and invest more.
No, I mean, great explanation. I was new to it, and prior to our first meeting, obviously read up on it a little bit more. It's super intriguing. And I think the environment that we're approaching, that we're getting ready to approach, right? So at the moment, the housing market, very, very low supply, demand is crazy. And you've got people that are potentially willing to put property on the market. But there's some things out there, if you will, right? I mentioned Biden earlier. There's some potential changes in his infrastructure policy where he's talking about taking capital gains up in California. It would be upwards of 52, 53%, I think, at the end of the day. And so I've talked to people and they're like, well, if that's the case, I wouldn't sell my property, right? Why would I put my property on the market and sell it and pay these high capital gains? I would just wait until the next administration came in, 2, 3, 4 years later, maybe 8, depending on however you look at it. And they roll back these policies, because one of the things that recently came out that I read that said that this could be retroactive from the date that he mentioned it, which means that you wouldn't even have an opportunity to get rid of these assets, if you will, or sell these assets prior to that higher capital gains tax coming into play, which would put a lot of people in a really, really hard financial position. But what I'm hearing from you is that there's the potential through this deferred sales trust that even if those people were to sell those properties, they could roll it into this trust and potentially avoid those gains. Is that right?
Yeah, 100%. So we call it the safe harbor or the safe boat during a very, very tumultuous, perfect storm that's going on in three phases, right? You mentioned the first one, which is the political part of it, right? The Biden administration is considering limiting or eliminating the 1031 exchange, except for a certain amount of gain, which essentially eliminates most of it for everybody. And remember, 1031 only works for investment property. It doesn't work for primary homes or crypto or businesses. And so it's already very limited already. And they're talking about taking it away even more so, as well as doubling the federal capital gains tax rate from 20 to potentially about 40%, right? Which pushes it above about 56% in California, not even accounting for the potential depreciation recapture, right? And so those are the political challenges, as well as the potential elimination of the stepped up basis, and a few other things. Now, economically, the other storm that's going on is we're seeing these all-time highs. I mean, these are some of the highest valuations in real estate, in businesses, cryptocurrency, in the stock market that we've ever seen. And that's also creating all this pressure for the third storm, which is the baby boomers, right? This is the largest wealth transfer in the history of the planet, according to the American Bankers Association. There's about 17 to $20 trillion that will pass in the next 20 years. And they're faced with toilets, trash, liability, huge assets, big houses where their kids are gone, wanting to relocate, right? Wanting to move out of state, wanting to move next to their grandkids, or businesses wanting to kind of retire. They've made their wealth and they're more of a preservation mode, and they want their time and energy back, right? And less stress with the less laws and regulations, but they don't know how to sell without getting hammered by the tax. And so enter the deferred sales trust. It's like the safe boat that's going to pick them up out of the crazy storm and move them into a safe harbor where they can defer tax, diversify the investments into stocks, bonds, mutual funds, or other real estate assets. It can also go back into another business venture. It can also go into hard money lending, right? So a number of things that you can invest it in, and then they can slowly receive payments back from the trust over time and pay taxes slowly. It's an installment sale for those who are wondering. It's not a Delaware statutory trust, by the way, which most people get it confused with because they see DST and they think, oh, I know about a Delaware, right? Delaware is just another form of a 1031. It's just you're giving up all control to a big money manager, huge fees, illiquid stuff, right? And typically around 4 to 5%. I've done a couple of those deals as well for clients, but typically it's only for large mortgage over basis challenges. So whatever the challenge may be for the client, the deferred sales trust can be a great solution.
No, I think you said a couple of important things here, right? So, typically a 1031 tax exchange is only for an investment property, right? You can never do it on a primary. You do have certain, exemptions, if you will, on your primary up to $500,000 if you're married, but anything above that would be taxed. And then on the investment side, you have to go like for like. So you have to, if you're selling, residential, investment property, in theory, the way that it works is you have to buy residential investment property again in order to avoid those 1031 or those tax consequences, if you will. And there's time restrictions on it, right? 45 days to identify, 180 days to close. But you're saying with the deferred sales trust that there's none of that. Is that
exactly? This is
right?
how we compare it from Blockbuster to Netflix, right? I don't know if you remember on a Friday night, Jeb, you'd show up at Blockbuster.
I do,
see
unfortunately.
that favorite movie, and it's behind that piece of cardboard, and you're walking up towards it, and you're excited because either your girlfriend or your wife, she's at home, she told you to go get that movie, but right before you get there, someone steps in front of you and takes that movie and looks at you and smiles because he also has someone at home that is special that he wants to get that movie for. So you're bummed out. So you get your second video, right? And now. But then you forget to rewind it or forget to return it within 3 days. And then Blockbuster gives you the penalty.
Right.
And then if you we live in California, right? So it's a sunny state. So we're not minding driving around, but it's 108 in Sacramento this week. So from where I'm at, I don't want to be driving. Well, that's like the 1031, right? It's the old transactional way of doing things. It's Blockbuster in that there's timing restrictions, right? We call it the shotgun wedding, 45 days to identify, 180 days to get married. Well, most people don't make great decisions under short time frames when there's low interest rate, low inventory, prices are through the roof. Right? Our parents taught us to sell high and buy low. They didn't teach us to sell high and buy higher 180 days later. And that's exactly what happened in '08. And clients had too much debt. They let the tax tail wag the investment dog. and not enough liquidity or diversification, and they lost half or all of it, and they spent the next 3, 4, 5, 10 years clawing out of it, right? So I was on the front lines of clients, and we were like, just it's painful to see that. So enter Netflix or the deferred sales trust, right? You can sell, pay off all your debt, defer all your tax, have liquid or illiquid investments. You can have a mixture of both. You can diversify, right? You can also dollar cost average, and that you don't have to go back into any investment in a short period of time. And the key here is you can diversify. That's really the big thing, right? Right now, we believe more than ever, now's the time to get out of debt, get liquidity, get diversification, right? And be prepared for a deal to hit you over the head, which might be tomorrow, might be a year or two from now. And the best deal story for this is a gentleman in 2006. This gentleman is very wealthy. He owned a $20 million asset, and he sold it for the first time. He used the deferred sales trust because he couldn't find a 1031 property. He parked the funds into the trust, put it into a conservative portfolio of stocks, bonds, mutual funds. And then when the market shifted, he reallocated the investments to an LLC and purchased the property back from the bank, because the bank called him up and said, hey, we got that property that you sold. Yeah, well, we just foreclosed on it. We're just curious. Do you want to buy it back at 40% less than what you purchased it for? He goes, yeah, it sounds like a pretty good deal. So he bought it back in partnership with the trust. And this is really where everything changes for the real estate investor. And it's a game changer, because he was able to sell high and wait all of those years and buy low, all tax deferred, not using a 1031. That's the game changer, right? That's the Netflix version of doing this. Does that make sense?
No, it does. I mean, I guess because I don't want to we could talk about this all day, but is this just for the wealthy, right? Because he was a wealthy investor, a lot of money on the line. I mean, for the mom and pop selling $1 million property in Southern California, and they own it free and clear, and they bought it at, let's say, $60,000, 50 years ago, 40 years ago, and it's now worth, say, $1 million, and they only get that 500,000 plus any improvements or whatever. They've got a big chunk of potential capital gains there. Are these people that can benefit from this, or is it just for those high net worth individuals?
So two things. You need to have at least $1 million gain and $1 million net proceeds. That's our minimum, right? We need to have at least those. But I'll give you a story of a deal we just closed last week for a teacher. She's a retired teacher, a single person who's lived in her house for 20 plus years. And her house, she bought it for about $200,000. Well, now it's worth $1.4 million. Okay. And she's on a fixed income. She feels trapped in her house a little bit because there's this huge tax. The tax is somewhere around $350,000 if you even after the 121 exclusion. Okay. So she's like, oh, if I sell, I get the tax, but I'd like to move out of California. Cost of California is going higher. Taxes are going higher. I'm on a fixed income. I can't even really afford the rent down the street in my own neighborhood. I could never rebuy my house right now, but all this money's sitting in my house. My kids are gone. What am I to do? I want to move to Georgia to be next to my family. So she decides to use the deferred sales trust. So she sells at 1.4. And she defers over $350,000 of tax. She's moved it all into the trust. She's moving to Georgia, and we're going to basically double her income for the income that's coming off of the trust. And it transforms her life, right? And that's really the essence of, hopefully your listeners are hearing here, that this Netflix way of doing things can be transformation for the big investor or the someone who has $1 million deal. Like that's her entire net worth, right? Right. Her entire life savings is tied to this house. And so she was able to use it. And of course it works for cryptocurrency. We can also save failed 1031 exchanges. And most of the things that people ask about is, I just don't see anyone doing it, and we're doing it. We closed about 7 deals the past 40 days. We'll close about another 7 in the next 40 days. And it's like riding a bike though. You've never rode this bike before, so it's like wobbly. Like, whoa! I only know about the 1031 bike, right, or I only know about the IRA bike or the 401k. But this installment sales structure, deferred sales trust, well, that's a new bike. But I'm telling you, if you ride with us, you'll get comfortable, and then it's really nice.
No. So last question before we go to final thoughts here on this is, who manages this? Is it you managing the portfolio in installments, assets, classes, all that good stuff?
Great question. So there's really 3 parties that help to create this. I call it the dream team to help you execute on this deferred sales trust. There's first the legal side of it. That's the tax attorney, and that is the deferred sales trust tax attorneys. They're my business partners, and they do all the brain surgery, if you will, right? Okay. And then there's like the trustee. I'm kind of like the nurse, right, who checks you in for surgery and then provides the aftercare, if you will, right, to help this make sense and go. And I'm a third party, unrelated trustee, right, and we actually are perform that part of it. The next part of it is the financial advisor who manages the funds. Now, each of these parties can't be one another. So we're all separate, but necessary to maintain the integrity of this trust. So it's not like just setting up an LLC. It takes a team of professionals to execute it in the order of which we need to follow the laws, okay? So with that, though, let's say it's your deal, you have to approve everything in writing, investments or distributions. So you're a secured lender, everything's protected, never commingled. It's a single entity trust that only does business with you. And so you say yes about this investment, no about that investment, right? I also have to say yes as well. So it's a dual thing. It's important to understand that. But everything's mathematical. You fill out a risk tolerance questionnaire, and if you're married, your spouse will too. And based upon that, a score is determined. Not unlike if you took your funds to a financial advisor nearby, and you're like, hey, can you manage our funds? They'll have you fill out the exact same or similar risk tolerance questionnaire. From there, that becomes the constitution for how and where the funds are invested, which again could be real estate on your own. It could be real estate passively within partners. It could be stock, bonds, and mutual funds, insurance products, right? A diversified portfolio.
Got it. I mean, I honestly could just keep throwing questions at you because this whole thing fascinates me to some extent. But instead of doing that, what I'll do is maybe we could do a part 2 on this and dive into some of the details about management funds over time. Is it, who pays, how often do you pay? Is it yearly? All that good stuff. But here's the deal. If you want to connect with Brett, his information is going to be in the description below. I'll link to his YouTube channel as well. A lot of videos on there. His website, you can read about him, his family, how the business works, and be able to get in touch with him. Free consultation, I think they offer to be able to tell you how they can assist you. And any final thoughts, Brett? Anything you want to throw out there? Where can people find you? All that good stuff.
Yeah, I also want to invite everyone to our every Friday we have a meetup. It's a DST cryptocurrency meetup where we're talking all things deferred sales trust, cryptocurrency. We're trying to demystify this whole thing and just invite past clients on to tell their testimonials, current strategic alliances, and current people who are just interested in learning more. So every Friday, 10 a.m. PST, you can attend that. We also have a free ebook, sell or buy, sell your real estate, business, or cryptocurrency smarter. It's like 9 steps to the deferred sales trust. So you can go to capitalgainstaxsolutions.com for all of that. That's capitalgainstaxsolutions.com. You can also search that and YouTube and find our YouTube channel.
Perfect. So it will be in the description below. Brett, appreciate you sharing that. Hopefully provide some benefit to those out there needing some ways to avoid crazy taxes. But I appreciate you being here. Thanks for sharing. We'll see you again soon. Have a great day. Bye-bye.